Well, ho, 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 all you autopilot traders out there. Hey, this is Santa, and I just want to let you know that in this week's session of Trade Your Way to Wealth and Financial Freedom, today, Dennis is going to cover 5 emotions that could be killing your profits. So let's get into today's session right now. Merry Christmas. Ho, ho, ho.
Okay, good afternoon, everybody. This is Dennis Wilburn, the Autopilot Trader. Welcome to Trade Your Way to Wealth and Financial Freedom. I got a question for you to jump right out of the box and it's not, is your Christmas shopping all done? Although you may be sitting there going, I got one, I got the guys are out there going, well, let's see, I've got Saturday, go out there and take care of stuff. If you're joining us over on the YouTube channel, just please let us know who's over there. Say hi. And the question I have for you is a lot more. It's the story I kind of started out the session with is, if you have ever sworn at your computer as you're sitting there watching a trade go against you, or maybe you slammed your hand down so hard on the keyboard that it broke the keyboard, or if you were like me, got so upset with the trade when it went against me that I basically slammed a cabinet drawer in the kitchen and the drawer exploded in my hands, and it was one of those don't tell your mother moments in time, then you may be a passionate trader. We're going to start talking a little bit about some emotional things, that emotional issues that traders have that could be impacting the way they're trading. And we'll do that a little bit later in today's session. But first of all, we want to jump in and I want to welcome Anil. Anil, welcome. I'm glad you're staying with your son so you can stay warm.
Good to be here. Thank you.
And I'm sure you have never, ever swore at your computer or slammed the keyboard, correct?
That is correct.
Okay. And so if anybody else can relate with me, just put a smiley face or something in the comment section, or just leave a note over on the YouTube channel. If you can relate, if you go, whoa. And the thing about it is I'm going to give you some, some ideas about how to not necessarily control emotions, but how to understand them and what they're telling you. And I've got a great recommendation for you that if you want to treat yourself for Christmas, this could be something that you may want to do. So just a reminder that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And hey, Warren, good to see you there. Hope you guys are doing well. And so here's where we're sitting as of today. This is basically just on closed trades. I'm sitting about 30%, and I'm about 8% in profit on the trades I have not closed yet. So as of last week, we were sitting here about 37%, and now we're sitting at about 38.3%. So it's looking like the year of 2022 is going to close out around the 40% mark, when of course that's my goal every year, and that's what I shoot for. And so let's go ahead and jump into today's session and take a look at the indexes. Now, Steve is not with us. I think he is still recouping from his knee replacement. And so we wish him well and continue to do so. And so let's take a look at what the heck is going on with the indexes. As you see, we had a really nice, and I'm looking at this from the perspective and through the lens of our 3-step setup with trigger. And if you're an autopilot trader, we're going to be talking a lot more about those triggers and what they look like and how they work. You've started to see a little bit of that in the emails we've been sending out to you on when we are getting into trades. I hope you've been able to take advantage of those. I think by doing that, you're going to increase the probabilities of having a successful trade. And so, there's a few people also gave me a smiley face about about their emotions. So love it. So what's happened with S&P? S&P basically had an initial rally attempt on Wednesday. And then the news came in that the economy was a little bit hotter than expected, lower job claims, not kind of stuff. We get a big reactive move on Thursday right here. And isn't it interesting? It went all the way back up, hit the 8-day moving average approximately, and then sold up. What are we getting today? We are getting boy, it's time to take off. The institutions are saying, it's time to take off. Head for the beach. Go celebrate Christmas with our family. So we're not going to do a lot today to basically be able to rally one way or the other. So I would call today kind of just a day that just marks time. It's marking time. Now, what's going to happen on Tuesday of next week? Haven't got a clue, but it would not surprise me, given that we have a lot of a situation where we are oversold on the short term. It would not surprise me to see us get at least a little brief rally going into the last 4 days of the year. Would not surprise me whatsoever. At the same time, though, the S&P, probably the second strongest index as we see right now. And the one that the index that I would say would be basically the strongest would be, for me at least, is IWM. The Russell. So what's the Russell working on? I love that we have a hammer that was from yesterday. Not quite a reversal signal over here on Tuesday, but a similar type reaction. Got all the way up to the 8-day moving average, fell back down. We'll see if we get a rebound. The thing that I really like about this, and if you will watch it over the weekend and just study this, is go see what if you're using the market forecast, see what the market forecast tends to do when it gets into the bottom, and what the price action also tends to do. So price action is telling us on IWM that we've got a nice level of support, just a little bit below the 171 level right there. We have a hammer, and we're getting a test back into the midsection of the hammer's wick. So that could be a green light to say, hey, that's a good enough that's a strong enough trigger to go ahead and buy a little bit. One thing I've discovered and I'm utilizing now is on my triggers. If I have a trigger towards the end of the day, I will go ahead and look at buying a half position so that we'll be ready, so that if it does gap up and go, then we'll at least have a piece of that opportunity to go up with us. And so that's what we're looking at. And as you see, the S&P and the Russell, I like the Russell. I think it's got a little bit more potential, but where's it likely to go? That's the rest of the story. Well, the 20-day moving average is right there, about the 177 level. The 50-day moving average is there. We could stretch a little bit all the way back up to this 183 level, but the momentum weekly wise, I've got a 2-line cluster on the weekly, which should say, hey, that's where we usually get a reversal. But remember, we can get a reversal from lower down, just as we did here when we had the 2-line cluster here. We identified last weekend. We went slightly lower and then back up. So where are we going? I think I'm looking at potential a rally back up to the 20 or the 50, and then closing out the year on a positive note, and then week after next, watch out below. I think the bad news for the economy, well, the good news for the economy, that it's stronger than they expected, but results in it being bad news for trading, which is one of those, crazy things that just, kind of happens. So that's what I'm looking at. Anil, what do you think about what's your stands on the market?
Stand on the market on my triple screen system. I got a buy signal on everything, Dow, S&P 500,
Okay.
not on NASDAQ, and also on Russell 3000.
Okay.
The good news, after a long time, I see the signal, but then on the daily chart, I got a sell signal. So there is a fight going on right now.
Okay. So basically your indicators are kind of divergent right now then, yeah?
Yeah, but I trust basically the weekly signal. So that gives me some hope.
Right.
That maybe it's the real thing. Maybe it's really turning around, but we'll see.
And what I would look at doing, folks, if you're looking at trading like IWM or the S&P or their leveraged ETFs, if I nibbled a little bit today, it would be a half position or a quarter position, and my stop is going to be just slightly below this low right here, this hammer, because if this hammer is a strong reversal signal, Anil, that low should stay intact. So from where it's at to slight below that low is about 1.67%, maybe closer to 2%. And so on the leverage ETF, that would be about a 6% stop loss. And so it's something to keep your eye on. So that's what we've got with that. I love the stock that you picked for this week. I think it's got some really strong potential. Let me get that up. I'm going to move my picture here a little bit. And you have picked up on Hal Burton. So what's the story here?
The story is this one came out very strong on my screens. On the MarketSmith screens, it even meets Minervini code 33, which means the EPS, sales, after-tax margin, 3/4 acceleration on all three.
Okay.
And had the weekly, daily triple screen signal. And we have some new features now available where I can do the back testing.
Oh, cool.
On the 3-year back testing, batting average is 64% and risk reward ratio is 3.8.
Okay.
Everything's looking good, so I'm going for it.
So you're gonna go ahead and jump in right now?
Yeah, I'll put the trade. I've not done it. I usually do it around 3 o'clock. So
Okay.
that's what I'll do.
So 3 o'clock for you is an hour before the market closes, huh?
Yeah.
Okay. And you know what's really interesting is what I have found is that's one of the secrets to managing your emotions is go in either close to the close where all the noise from the day is gone, and or even after hour, put in your orders after hours with a conditional order, and it helps quell or tamp down any kind of poor decision making based on emotions. So,
Well
excellent.
said. Well said.
Okay, I like this. Yeah, it needs to break out here, but if it breaks out from there, you're about almost a 20% gain upside target from there. So my stock for the I had a couple of them. Now the one that it's really a hot one. I'm saving that one for the final hour for our premium AutoPilot traders. But the one I'm going to show for this one is also a great stock. It is ANET. That is the who is that? That is Arista Networks. This is looking excellent, folks. We have not turned back up on the TSI yet. However, I have two of the 3-step setups in place. I'm at support, at long time support. Now it could drop a little bit further. I have a what could be a candlestick, which is a hammer today, and or a dragonfly doji, which is a reversal signal. So that's number 2. The one thing that I'm missing is I do not have a momentum shift yet, but it's darn close. And so what we could get is a bounce a little bit lower to that 117.25 level, or just a reversal right straight up from here. And so it's almost close enough to wait for my reversal trigger signal on the price action and the momentum, and that would be my entry signal for ANET. That's ANET. And Anil, comments?
Yes, 2 things. I'm looking at my triple screen chart, and again, ANET has a weekly triple screen signal a few weeks ago, so it's trying to go up, but then also had a sell signal on the daily, which indicates it has pulled back.
Right.
And but if as I said, I got more confidence in weekly. So this is when the daily gives a sell signal with a weekly up, that means that there might be a good opportunity to pick it up at the dip.
Okay.
And if it does work, my instant stats is 57% risk reward. 57% batting average and 2.5 risk reward. So it looks pretty good.
Okay, excellent. So, and as you can see, this little purple box is the magic fib box, and it's worked its way back down into. So that's a couple of great stocks to be taken a look at. Again, given the unpredictability of the market right now, folks, I would, if you do want to follow or jump into if you want to basically get into a potential trade on these, go with a half position or a quarter position. And so, Dennis, aren't you concerned that a net will fill the gap down to the 110 level, which is basically this gap right here? And that's a great question, Marty, and it's down to about the 113 level, if you will. That's why my trigger hasn't triggered yet. My trigger saying get into the trade is not triggered yet. And so it may drop a little bit lower where it would take me closer to that level of support and then give me a trigger. And the trigger being a reversal candlestick, but then proof that it's moving back up. So that means that we have to get a close back above the high of the low day, if you will, for simplicity, from a simplicity standpoint. So great question. So am I concerned it's going to get down here into this area is the rest of the question. And the answer to that is no, I'm not. And the reason why is that whole gap up window here, right here, it may close, probably will close. However, I know that represents a strong level of past support, with the midsection of the gap being the strongest level of support. So where is that? That's about the 115 level. And so, again, remember what I said. I'm not buying it today. I'm waiting for my trigger. Does that make sense?
Your 200-day moving average is around at 117. So
yep, it's right there.
Yeah.
Excellent. So great question. So let's go ahead and addressing the situation. The thing about it is if you are trading a system that has an edge, a proven successful edge, but you're not profitable, the problem may be in your head. It's either in your head, and then your head may be messing with you, resulting in you putting in orders improperly or trying to wing it or be, and I know that during my early days of being a trader, I would shoot from the hip a lot. I was a gunslinger. I was doing, I'll be damned. I'm gonna, damn the torpedoes, full speed ahead, to put it in nautical terms. That was the way I approached things. And the thing about it is when I got tired of losing, and after I'd lost a lot of money, I was finally getting slapped around the face, and I said, you know what? There's got to be some additional answers here. And part of those answers is learning how to understand my emotions. What were my emotions trying to tell me? And from almost not day one, but from about 1860, you got to remember, the institutions on the other side of the trade, they are not your friends. They do not want you to win. They want to take your money, and they will do what they can to provide both distractions and subtle stimulations or stimulus that get you excited, get your blood flowing, and you're just going, And so you have to have a plan. You got to have a plan to work through that, because overstimulation, like this guy here, you ever feel like that guy? I was that guy. Overstimulation leads to out of control emotions. Out of control emotions lead to poor or bad trade decisions. And so, rather than getting mad, why don't we get better? Why don't we get better in what we're doing? And that's partly understanding the psychology of trading. So how do you deal with anger, fear, greed, pride, and hope? Those are the 5 primary emotions that drive us in our trading. And so one of the things that I've learned, as I said, is you have to get rid of what's overstimulating me. Did you know that? And part of the overstimulation I was having that would basically make me abandon my trading plan was leaving the computer on all day long while the market was live and watching the tickers or watching the price action change, go up, down, sideways, that kind of stuff. And it's a known fact that going back to 1860, when the ticker tape machine first came out and they started installing it in the bucket shops where people would trade, the institutions noticed that when they put the ticker machines in the bucket shops, people traded more. People lost more money. From that time, they started putting them widespread. And if you'll notice on every one of the financial networks, what do they have running across the bottom of the page? They've got the ticker machine, tick, 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 tick. And while it was a great advancement because they had real-time information, or at least information from the telegraphs back in the day, they've still utilized that ploy to distract us and get us to make dumb decisions. And when we're distracted and overstimulated, you got to figure out a way to get out of that, because each one of these can build on top of each other. Anger. And anger is oftentimes revealing, I'm ticked off because I had a crummy trade, but in reality, what am I ticked off about? I'm excuse my French, but I'm pissed at myself because I didn't follow my system. That's why we have to be aware of this. And part of the thing is just journal about this. Fear, anger, greed, pride, hope. And so these are the essence of the emotions that will destroy your success. And what do we do? And I'm going to be talking about this a lot going into the new year, about what do we do, not so much to control them, but to understand them and understand what they're trying to tell us about how we're trading. So, Anil, you got any question about these? I mean, these are powerful forces that will mess you up when it comes to trading.
No, I think you are exactly right.
Excellent. So anyway, I just want to let you know that there is a better way. And one of the things that I have discovered, if you have a system with an edge, but you still are losing, it could be your mental game. And if you want to improve your, trading is so much like individual sports, like golf and all that kind of stuff. And part of the advancement, that you can have a great, super awesome golfer, but if his mental game is messed up, he will never perform to his peak. And we want to grow closer to performing to our peak. And a book that I am currently reading and applying is this book called Mental Game of Trading by Jared Tendler. You check this book out. You can get it on Amazon, and there's where you can get it at. And I have to be upfront and say that, I am an Amazon affiliate person. It doesn't mean you will pay more for anything. Anyway, I'll put a link down in the description on the YouTube channel, and also when I pass this out. But it's a great book, great book.
And by the way, I'm going through your journal, and I like better than mine, so I'm going to adopt that.
Okay, thank you very much. Check it out. So there you go. Okay, that's what we've got for today, guys. And sorry for running off a little bit there. I want to just say aloha. God bless everybody. And Anil, thank you so much for your contributions. I would like to chat in the near future about that the neuro-linguistic approach to training. I also
we can do that anytime.
Okay, I want to say aloha, trade well, prosper. And, the thing about it is if the trading game is not treating you right, it may be because, one, poor execution of an already existing winning system, or it could also be just some mental stuff. And the mental stuff, I know for me, still slaps me upside the head. And so as Nicole says, Mele Kalikimaka, which is in Hawaii, Merry Christmas. And remember, Monday's a day off. There will be no trading on Monday. And we look forward to pushing. I really am excited and very passionate about what's going to be happening going into 2023. I encourage you, join us with the AutoPilot trading and take it for a test drive and see how it fits your bailiwick. And thank you for the great comments about the journal, Anil. So aloha, God bless everybody on YouTube. Thanks for joining us. We'll see you next Friday.